We all have gathered here for a webinar, which is going to focus on the post-COP insights. And we are going to explore the outcomes and, charting the path ahead. So firstly, I would just want to introduce myself and the privileged panelists who are here. So myself, Priyanka Pothana, I'm the CEO of GC Advisory, and I would be moderating today's session. GC Advisory has been a pioneer in the carbon market since 2009, with an experience of almost 15 years, having served more than 250 clients and generated more than 150 million carbon credits across sectors and geographies. We have been instrumental in paving the path towards climate leadership. And I'm really privileged to share this platform along with esteemed panelists today. So to begin with, let me just introduce our panelists here. Firstly, Mr. Dinesh Babu. He's the Executive Director at InfraBlocks Capital Singapore. Mr. Dinesh is the Executive Director at InfraBlocks Capital Singapore with a deep expertise in sustainable development, carbon markets, and clean energy. He has played a pivotal role in driving major initiatives, including leading the World Bank's $625 million concessional lending solar rooftop program. Recently, he has directed the Climate Action Data Trust in Singapore, working to enhance transparency and integrity with carbon markets. Currently, Mr. Dinesh is focused on establishing a decarbonization fund for Asia and Africa at InfraBlocks Capital, utilizing digital solutions to advance the carbon market ecosystem. Then I would want to introduce Mr. Sachanan Chakravarti. He's a partner and CEO at Avishkar Carbon Platform, and he's a climate finance and investment expert. Mr. Chakravarti is a seasoned expert in climate finance and sustainable investments with over 25 years of experience. As the partner and CEO of Avishkar Carbon Platform, he leads carbon asset development and management business of the group. Sir is a member of Avishkar's group executive committee, the investment committee of Avishkar, and partner of Avishkar's Frontier Fund, investing across South and Southeast Asia. His extensive career includes leadership roles at Standard Chartered Bank, ING Bank, and Bank of America, with expertise spanning project finance, export finance, leverage financing. He's an alumnus of IIM Bangalore and IIT Kharagpur. Mr. Chakravarti combines his strong analytical foundation with commitment to leveraging finance for sustainable development, positioning him as a thought leader in the climate finance and investment strategies. Thirdly, I would want to introduce Dr. P. Rambabu. He is the Chief Sustainability Officer at Greenco Group. He's an advisor to World Bank Group, and he's also the founder of GC Advisory. Dr. Rambabu is a prominent thought leader in sustainability and climate change with over 35 years of experience in governance, sustainability, and climate change. Currently, he serves as a Chief Sustainability Officer at Greenco Group and as an advisor for the World Bank Group. He has led over 200 sustainability initiatives across government bodies, international organizations, and corporations. His work has significantly influenced environmental governance, climate finance policies in India and globally. A strong advocate of net zero and circular economy, Dr. Rambabu works closely with leadership teams across India and Asia to drive transformative sustainability initiatives. So this was the introduction for the expert panel. Secondly, I will just want to inform you about the structure of the whole panel. We have actually pushed this panel into 3 discussion rounds. Each discussion round would be led by an expert and with contributions from the other 2 panelists as well. The query form or the questions form, the QR code is presented right in front of you. It is also posted in the chat box. I would appreciate if you all can post your, questions using this QR code or in the chat box, the link which is available. In case if time doesn't permit, we will definitely get back to you with your answers over an email. Unfortunately, we have a hard close at 3:30 because our panelists have to head on to another other commitments as well. So I would appreciate that, we are able to close this session within the allotted time. Yeah. So let me just move on and, understand why are we all here and, what this discussion or 1 hour ahead of us actually brings across. So definitely COP29 conference has got concluded. There were many outcomes, outcomes around the new collective quantified goal, around Article 6 agreement, around scaling the climate finance, around adaptation finance, around the global investor statement on climate change. So, and obviously there are multiple more, outcomes which we have seen. I'm sure many of us has been have been reading a lot around it, across the news, around the LinkedIn, around multiple thought leadership papers which have been brought out by multiple organizations. Primarily here, let me begin with the first discussion round, and our expert panel list here will be Mr. Dinesh, who would be contributing towards this. This is towards you. I want to understand, some of the COP29 outcomes and around the global, stock take. Any contributions that you may want to, or appraise the panel around, how ambitious has been. Obviously, in the COP28 we had a global stock take, and this year we could see multiple, countries revising their NDCs as well. And how do you look at this, and what are your thoughts around some of the bullet points which are already mentioned on the screen as well. So firstly, outcomes, something around the global stock take, and bridging the gaps. Has COP 29 been able to bridge the gaps that were being posed initially, and what we have to look ahead. Sir, over to you.
Thank you, Priyanka. Good afternoon to everybody, and thank you so much for this opportunity. So we also met before the COP, and now we are meeting after the COP. But somehow I felt Sanjay should have started the webinar because of the good news that he is going to discuss. I'm not going to give you any good news, so maybe it's a bad start. But having said that, with all the what do you call unprecedented outcomes in the recent COPs. So we had a very good outcome on Article 6 from day one. And I'm just coming out of a meeting with Azerbaijan and many other countries. 22 countries are meeting now as we speak in Singapore to discuss about high integrity carbon markets. So I've been there a day and a half with all the policy and the decision makers, and everybody is having a good upbeat in terms of the carbon markets. But when it comes to the topic that you have asked me to speak, it has not been a great outcome that we saw in COP29. So that's why I said it's not going to be a great news from my end to say that we didn't get enough attention in terms of how the developing countries and the developed countries were trying to approach the kind of Dubai kind of a decision in terms of how we implement the learnings from the global stock take, and therefore how we should approach. So it's a natural that the developed countries wanted to have a blanket approach in terms of finding an overall holistic solution towards implementing the GST, whereas the developing countries, as usual, and I don't blame them, but it's quite obvious that they wanted to pick the financing part and then discuss more about it and try to create the base for a strong argument for getting access to the funding in order to implement and meet their NDC commitments, which is one of the major gaps as well. So there was this discord in terms of how the approach diversification of these two groups. It never ended, and therefore it led to kind of an inconclusive aspect of how the implementation should happen. And we hope definitely in the immediate future in Substar there'll be some discussions, but I'm not hopeful about that. But probably the next COP we may have more experience to get some solution in terms of how we can implement it. So from that angle, the official outcome is not conclusive. It is inconclusive because of the reasons I mentioned on the diverged kind of the expectations between the developed and the developing countries. So that is one angle. But in terms of the as such fundamental understanding of how each and every country is now approaching the kind of meeting or closing the gaps. Unfortunately, as I said, it's quite natural. There is no surprise that everybody is linking everything behind the NDC, and the kind of NDC 3.0, which we are anticipating. For few, it is just an updation of the previous NDCs. Again, it is not a great story that we anticipated in terms of more submissions that happened during COP. So therefore, most of them have chosen to submit it by the deadline, which is February or so. And even today, when I was discussing with many countries, they have kind of a limited positivity in terms of how they can showcase that they can do better than before, because they couldn't really see any tangible outcome in terms of what they announced already, barring a few countries who have definitely progressed well. Maybe they grandfathered their original submission and therefore today they are comfortable, or they really achieved something. So there is a mixed bag of how the previous NDC reporting has been done versus what they have updated and what they're going to submit now. So therefore, on both the accounts, we didn't see a great positive outcome in terms of how the parties are going to really come together and try to implement the priority actions. But the common thread has always been the finance. So personally speaking, it looks very kind of difficult to see how we go past it. It is very difficult to go past it, but it could be a kind of a combination of a package with technology transfer and finance, rather than just asking for the currency, because it's going to be extremely difficult to put the number in terms of how even that 300 billion which we saw from where it is going to come from. So rather, it would be very useful to understand how these parties are trying to outline the whole package. The combination of good policy-based emission reductions and then technology transfer over a period of time, and therefore the associated IPs, and then in terms of capacities, and then any other enabling environment that would help these countries to be on their own and implement actions over a long period of time, not for a short-sighted policies and goals. So it's a very, very generic feedback that you will expect from me, and as nothing major happened to celebrate other than what Sunshine is going to share with all of us. But having said that, what I could see as the way forward in terms of how the NDC is going to shape itself is the fundamental area of the ownership. So how each and every country is going to own the NDC in terms of showcasing the conditional and unconditional kind of targets set up, how they are going to alter it, and then how also the countries are going to embrace the implementation steps or the implementation building blocks for the net zero, because very few discussions have officially happened on discussing about net zero, because today the priorities are different. We are talking different puzzle pieces on its exclusivity in silos, so that once we get those puzzles clear, the pieces clear, then we come to the bigger topic of net zero. Maybe it's too early for many countries. I fully agree on that. But I think somewhere we have to try to see the kind of back working in terms of how much time we have, and therefore what is going to be the immediate midterm and long-term policies, and how it is going to dovetail with, as I mentioned, the holistic package of technology, finance, enabling policy, etc. So that is one angle I feel there should be some discussions that should be initiate amongst the developing countries from this part of the world. That is one angle. The other angle is to see the kind of interventions. We talk about this in energy efficiency sector, if audience can connect with that we talk, when we talk about energy efficiency, we talk about those interventions which doesn't need any major investments or technology tweaking, which is basically behavior change, like switch off something. So switch off something will reduce some energy. If you're not using it, please switch it off. So there are certain areas where that kind of a practice could be deployed in terms of policy-enabled reductions, which Ram Babu sir will appreciate what I'm trying to convey. So policy-based emission reductions have become a practice. For example, Uzbekistan is the first country to be supported by World Bank to receive millions of dollars after implementing policy. They have showcased emission reductions and they have received money, and now they are planning more. And now Asian Development Bank very recently announced that they would like to introduce policy-based lending for countries in Asia, the member countries of ADB, to receive funding again in millions of dollars if they can implement policies and showcase reduction in emissions. So therefore, these kind of instruments, which otherwise also came as a concessional line of credit, we may attract more countries because the ADB could make these conditions more attractive, and World Bank could also work with them. If this is like swapping the debt for nature kind of innovative instruments we are talking about. But here we are simply taking up the policy as an instrument and then see whether that could incentivize any country that if they implement it to the core that it was intended to, then they can definitely receive a kind of enough incentives to further introduce such policy interventions in other prioritized areas. So these are the bits and pieces in terms of how the countries should start thinking for the next 30, 40 years and not just be short-sighted in terms of how things are going to happen in the next 5 years. And that's another last point which I would like to kind of mention and conclude is that people say that 2030 Paris Agreement is a sunset. So there is no sunset, but definitely we know that that is the official period of how things are moving, and of course we will have a extended areas of how we should look into the post 2030 market as well. But having said that, the carbon market as such is not going to be the only solution for all the problems that we are talking today. Carbon market is only a piece of the whole solution, and therefore the concentration or too much of attention to carbon markets alone is not going to give a country what it deserves and what it needs actually. And that's why I said the thought process should expand beyond just mitigation and removals and move more towards embracing the whole economy-wide measures that has to be implemented. Thank you.
Absolutely. Thank you so much, Mr. Dinesh. Very, very insightful, I would say. So on the similar lines, I would just request Mr. Chakrabarti if you would want to contribute, a few statements on, the COP29 outcomes and the global stocktake.
Thank you, Priyanka. Thank you for giving me the opportunity to be here as well. Like Mr. Dinesh Babu said, I think I should be talking a lot more about the Article 6 and what happened on that, rather than on the COP29 outcomes and global stocktake. I don't really have much to contribute. I think Mr. Dinesh Babu has sort of touched upon all the right points. There is a lot more work that needs to get done on the developing country side itself. I think there is a lot more work that needs to get done before we ultimately get to something that works, pretty much for the entire 168 nations, I guess. In a way, there are lots of details that need to be worked out. So yeah, I mean, I won't really add much to the global stocktake and the COP29, but maybe just moving on to Article 6, which is what Dinesh Babu mentioned a couple of times already that I will probably have the most to say, and that is absolutely true. So maybe I just move on to that. Also conscious a little bit of time, given that we have a limited time. So on the on Article 6, clearly there was a breakthrough. Possibly a little surprising in some sense as well, given all the sort of disappointments that people have had over time, including in Dubai. Just for the audience to also appreciate, it's actually quite a significant breakthrough that way. I mean, it's for something like Article 6.2, it's a culmination of about 9 years of work that went into it. The rule book was coming, and it sort of never came in a form that can be really actioned. Article 6.4, again, we got some great news. There is still some work to be done. So maybe just to very quickly summarize, I guess we have essentially two mechanisms very broadly: 6.2, 6.4 for carbon trade under the Paris Agreement. 6.2 mostly bilateral, multilateral. There, in that 6.2 in some sense was already operational. We already saw in the last few years there were bilateral agreements, signed. There were actually quite a few. I mean, there were about 58 nations involved. I believe, there were some 90 different bilateral agreements or MOUs or arrangements that were already signed. The challenge with all of that was to kind of streamline that and ensure that the right sort of authorizations are there for each one of them. The right, that there is a registry which registers all of them. That is reported properly. If there are inconsistencies, those are addressed. So I think what's really happened, as part of COP29 really is a lot of that has been streamlined, and it's been laid out to a great degree of clarity. There will obviously be some work to be done in terms of defining a few things, but what the authorizations need to contain, the registries, which was a huge issue. I've heard till about 90 minutes before it was finally gavelled through, the whole Article 6 thing could have fallen apart on this issue of registry. And there were red lines on it, which ultimately sort of went away with some compromise that was agreed. So there is a solution on the registries which seem to work. There's an international registry which will have more like a pull and view function, but the UN will also provide registries for countries who would who don't have the capacity to sort of form their own. So there is a solution that effectively works. Reporting, there are mechanisms there. For addressing inconsistency, there are mechanisms there. For potentially canceling authorizations, there is also a mechanism there. Again, I mean, these are big picture. There are some issues that need to get sort of worked out, some fine tuning, but it's all in the right direction. Potentially you could actually start trading credits under that, and people are already trading credits under that. On 6.4, again, we achieved a lot. It started with a big bang. COP29 started with a big bang with the standards for methodology, standards for removals, which the supervisory with the SBM had agreed, kind of being accepted by the CMA. So that was a great first step. I mean, market participants knew already, what those recommendations were, but to have it sort of approved on day one itself was a very positive move. And by the time we ended, of course, the Article 6.4 sort of decision again gave a lot of clarity in terms of authorization again, authorized units vis-a-vis mitigation contributions, the contribution to the adaptation fund limited to only the ERs and not the mitigation contributions, transitioning AR activities, afforestation, reforestation activities from CDM into the PACM, so 6.4 effectively being called PACM today. So lots of positive moves. On 6.4, clearly there is more work to be done. While the standards for the methodology, standards for removals are there, with the specific tools, methodologies will all have to come out. That's the work plan for 2025. We feel fairly confident that will happen on an accelerated basis. I understand, the first set of tools and methodologies are to come out by end of Q1 as per the work plan, which will be great. Hopefully we see some of the easier ones come up earlier. Maybe some of the more difficult ones will take some time. So we have, I think, the essentials of the rule book there. The way I look at 6.4, I think we have a lot of the theory. We still need a little bit more of the theory to be completed before full implementation can happen. On 6.2, we effectively have most of the theory there. It's really more about implementing, which is the way I kind of look at where these two are positioned. But clearly great news from an Article 6 market perspective. Maybe I'll just add some comments on, okay, where do we see therefore sort of carbon markets going? So this is all sort of the UN framework. Now, what do parties do? People who are developing, buyers. How do we look at how do people think about that, or maybe thinking about that? So 6.2, clearly there is already building momentum. I mean, we have number of buyers, number of sellers in that. This gives a lot more clarity, a lot more comfort, I think, to all parties concerned. We will still, obviously the countries need to have their own sort of authorization mechanisms and the registries and all of that, which will take, presumably some time, but a lot of the countries are already working on that. I think there's a report that came out, during COP, which said about 70 plus countries are already working towards, creating their own registries and authorization mechanism. About 10 or 11 have already sort of got their authorization mechanism. India is one of them who has actually got his own authorization mechanism. So some of that work will still happen, but it does allow, including private participants, to start participating in the 6.2 market. To the extent that the host country permits it, or the host country, sort of sends in its own requirements. It should allow people to participate. Interestingly, from the VCM market, the voluntary carbon market players, this is again an area. I mean, if you look at the broader voluntary carbon market ecosystem, which is the registries, the methodologies, even people like rating agencies, for example, I think there's a role for them to play through the Article 6.2. I think there's a visible role for them already in some sense, and we are starting to see that happening in some of the discussions. So today, some of the bilateral agreements that we see under 6.2, it recognizes methodology, widely accepted methodologies like Verra and Gold Standard, in many of them. And it's really up to the country. So the essential difference is going to be, if you look at from the sort of integrity of credit perspective, 6.4, we're going to have very specified methodologies, tools, and a certain degree of certainty or universality, on everybody understanding what those means. Under 6.2, there is obviously more leeway. Bilaterally, countries can decide what they choose. So you'll have to be, I think from a buyer perspective, have to be a little more sort of, do a little more diligence on exactly what is going on there. But, it is expected, of course, that those methodologies that are adopted under 6.2 will also borrow from what's coming out of 6.4 or the sort of, more better accepted methodologies under the independent standards like the Verras and the Gold Standard. So under 6.2, there is a role for that as well. 6.4, I mean, personally, if you ask me, I think we'll probably start seeing trading not next year, but the year after that, maybe 2026. Clearly, the tools methodologies need to come in. Hopefully, there won't be too much of a surprise in that. I mean, we already have some established sort of tools coming through the CDM from the CDM era, but we also have a lot of independent standards. We've done a lot of work in improving sort of integrity of a lot of these credits. So, supervisory body has to decide what they do, but hopefully they borrow from a lot of that work that has already happened, in which case the market won't really be surprised with the way, or they will be operationally possible, the methodologies that come in. The accreditation of, sort of the verification validation bodies, those also have to happen, which is expected to happen sometime through the middle of next year. The practical challenges of sort of operationalizing, which is, there's in 6.2, but also I think importantly in 6.4 also is that, the countries have to figure out their own sort of, integration of their own sort of internal carbon markets with the way 6.4 markets work, right? I mean, what does that do from their climate goal perspective? What's on the positive list, what's on the negative list from a 6.4 trading, their own authorization mechanism, their own registry. So some of that is going to take time, which, I mean, if you ask my opinion, there's probably another 12 to 18 months. So you're probably going to start seeing a lot more sort of active trading in that market, perhaps in 2026 sometime. So I think that's probably a big picture summary. Just from a financing perspective, I think I'm a big believer in markets. If markets work, financing is going to come. We have projects under execution at this time, and we speak to a lot of sort of financiers and developers as well. I think there's definitely positive interest in investing more in the carbon markets in the projects which will trade, VCM or now so Article 6.4. It's a matter of, but the markets need the rules of the playing field to be clear, right? So that's most important. I mean, if I'm going to play in that market, I need to know what the rules are, and the rules are, we're not clear so far. They're clear in some aspects now, in some parts. Some of the rules still need to be clear. So once we have that level of clarity, I think you'll see a lot more investment flowing into the markets. Yeah, I think I'm going to stop here, and Dinesh Babu, Ram Babu, any other comments to add, please?
Yes, sure. Thank you. Thank you so much, Mr. Chakravarti. It was, very insightful. I would just request Mr. Dinesh if you would want to contribute something around on the similar lines, continuing Mr. Chakravarti's conversation.
Yeah, no, I'll simply say I share his excitement as well. So the whole market is now happy that only in 2028 further negotiations are allowed under Article 6. So that at least gives a big breather for the whole market. But as he said, a lot of work needs to be done. And I heard UNFCCC yesterday talking about 6.2 is like already traveling in a car which is still wobbling and things are being repaired as the traveling is happening, whereas 6.4 it is in the shed and the new car is being built. So it's a very good analogy of seeing how things are based on the negotiation outcomes. A couple of key aspects which I just want to touch, and then I'll leave it to you, Priyanka and Sir, actually, is about the intersection of the voluntary market into the compliance. And this topic is coming up in each and every discussion as we move forward. As the country as big as India and China, there is absolutely no clarity in terms of where to put the money and therefore how to strategize myself. And irrespective of whether 6.2 or 6.4, money comes from the private sector. Government is not investing, government is not procuring, government is not basically doing something for its own. And therefore, it's all private sector, private sector, private sector all the way. Therefore, private sector needs that strategy and smartness in terms of choosing the type of market. And if country like India or China or Brazil says, or Indonesia says that export of carbon credits is not going to be allowed for certain segments, and take it from me, is going to come very soon for India, China, or Brazil, that there's no blanket export ban, but there's going to be a kind of a consideration for certain sectors not to sell the carbon credits unless there is more clarity of that particular sector growth within the country. And therefore, the intersection or the convergence or talking to each other has to happen more between the voluntary and the compliance market. And therefore, we also saw Gold Standard and Vera coming together and working with the government of Singapore to launch Article 6 playbook to see how voluntary markets could also work towards helping or converging with Article 6 as well. So that's a place to watch in terms of how you get more confidence in still working with the voluntary market, but you will be upgraded to the business class of Article 6.2 and get more access to the investments and climate finance. So that is one part I want to really touch upon. The second is, I won't say the danger, but there's a thin line in terms of how you see CORSIA market and then you see the IMO market. Maybe it's down 5 years, I don't know. All these compliance markets coming up along with Article 6. And therefore, there is a lot of expectation for the existing projects and volumes that they could upgrade it very easily by just getting a letter of authorization and doing corresponding adjustments. They become as I mentioned to you, upgraded to business class or first class. I think that is not going to be that easy. So therefore, yesterday you would have seen how CORSIA has cut down all the eligible projects under the methodologies, citing various reasons. So the demand for CORSIA is going to pick up. That's a good news. But the supply has to behave. Therefore, we have to really understand how the voluntary market is going to correct itself and be prepared, and again be smart and strategic in terms of how they can be ready to meet those requirements to upgrade themselves and then get a better price in such compliance mechanism. So it's not just we bask under the sunshine of the success of Article 6, but the voluntary market has to step up equally and then try to see how they can work together with the compliance mechanisms, really work towards producing the high integrity carbon credits so that the market can trust, and then the investors could come in. Because today people are asking, where is the demand? We always talk about supply. Because we are from this part of the region, we always talk about supply. But where is the demand? Entire Europe has said they will not buy ITMOs, but they will support ITMOs. So is it going to be MCUs? We don't know that yet. Australia this side said no ITMOs. So US, you know the story, what is going to happen in January. So where is the demand? And if there is a demand, then how we're going to serve it. So I think that's how I think it's a very good opportunity for us to see how the convergence could happen between these two markets and how we can step up. Thanks.
Yeah. Thank you, Mr. Dinesh. Dr. Ram, will you want to add a few, on both the sides? Firstly, around, the Article 6 part and, the first round of discussion around the global stock take. Dr. Ram, can you hear us?
Yes, I can. Yeah. Thank you. Thank you for giving me opportunity. I think Dinesh and Sanchayan have covered comprehensively the respective areas that they took up. I have certain comments and also maybe as a follow-up, first Dinesh can answer. If there is any clarity when I am giving my NDC, the way the UNFCCC is dealing, whether they are supported or unsupported. Okay, is there any clarity that that the NDC will be NDC, whether they are to be supported or not to be supported? So that is one thing that I wanted to ask Dinesh. And as far as the GST and then subsequent NDC revisions are there, is there any talk on the European countries and many of the developed countries, okay, increasing these NDCs and setting aside certain part of the NDC for supporting Article 6 credits or Article 6 mechanisms or cooperative mechanisms. This is second part of it. We try to push it in COP quite a lot, and through FICCI, we did one side event in which this was the main topic. And this topic was also touched upon by Dinesh when he said that where is the demand. So if the in Article 6 is one area where I think we need to focus on creating the demand. And that would mean that not making a big virtue out of doing by myself and trying to understand the effectivity of the market mechanisms to drive the climate action deeper and wider. And is that debate going on, or is it that only a few like from India who want to create demand for ITMOs are voicing? Is it finding? We also hearing some rumors that EU ETS itself might make some provision for ITMOs. So I wanted if Dinesh wants to clarify on that. Whereas whatever Sanchayan said, I think is a very comprehensively the whole areas were covered. Yes, Article 6.4, a lot of work needs to be done, but all that work needs to be done by the UNFCCC Secretariat, and the parties will not get involved. That is one very, very good thing, that the parties said hands off for till 2028. So in fact, that seems to be much better than parties saying come back to us. So I think our Secretariat and our Perumalji, I think all these guys have a lot of work to do. So I think Article 6.4 is shaping up much faster than what we all anticipated. And as far as the the voluntary market and the earlier CDM, the whole knowledge and the knowledge base that we have developed, including the voluntary markets, I think that needs to be explicitly recognized by the article, the UNFCCC. I will not say Article 6.2 and 4. I think they need to incorporate all these agencies and their knowledge and experience into the whole institutional framework. What I mean by saying is that Article 6.4 can even offer to some of these standard bodies for development of methodologies, development of standards, etc., even can adopt some of them. And some of these bodies can even be sourced for their ability to maintain registries, etc. So I think to me it looks like Article 6.2 and 6.4 and corresponding adjustments seeming to be the golden rule. I think that is going to survive, and everything else has to sort of whether everybody like Corsia, IMO. I even hear that Germany said that even the scope 3 emissions offsetting has to be from ITMOS. So, they are not using the word all the time ITMOS actually. They are using the words like, with corresponding adjustments, with no double counting. Some of these words are leading to somewhere very nearer to ITMOS. So that is what is happening in Article 6.2 and 4. And, both Dinesh and Sanchayan, a few questions that I, put on the table, if you can answer that, please.
Maybe
Thank
Sanchayan, because of your time restriction, you want to go first, then I will pitch in.
No, I'm around for some time. So I think, I completely agree with, Rambabu's suggestion that, look, there is this whole infrastructure around the voluntary. I'm really, attending to the voluntary carbon market and the bodies, sort of question. All the work that has happened, that should certainly inform what methodologies, tools come out from under the UNFCCC and through the SBM, right? So that there is, I understand that it is possible to even submit new methodologies, to the body. Clearly, some of the sort of technology-based carbon removal standards were not there at the CDM as well. So those can be sent. So there seems to be a positive intent, at least from the distance I hear. There's a positive intent on the part of the UNFCCC SBM to sort of take in all the learnings that is there outside of that framework as well. So yeah, I mean that's something I would completely agree. On the global stock take, I would rather defer to you, Dinesh Babu, on your comments on that.
Sure, thanks. Yeah. So the first thing first, maybe I'm simplifying my answer, Rambabuji, actually, is that the UNFCCC sees the conditional as not a mandated one, because it is contingent upon meeting certain finance and technology and kind of capacity, whereas unconditional is mandatory. But whether it's legally enforceable, I'm not a lawyer to say that, but in the outward aspect of the negotiations, the unconditional NDC is mandatory in terms of showcasing how the country has committed to it and achieved it, and what are the ways and means, the pathways and all that stuff towards.
Dinesh, I understand that some of the reporting formats do not distinguish between the conditional and unconditional. So in the reporting format, you don't have separate columns for them. Hence, there is a feeling, at least, or apprehension, because a lot of people have put their bets on the conditional NDC and 6.2 projects. So that's if you have any idea, and throw some light on that.
Yeah, no, I unfortunately I have very limited insight on that, at least from the current ongoing discussions. I may not be that much knowledgeable on what happened recently in terms of this format changes, but what I could hear on the corridors is that it's a very simple way of understanding it. Whatever the reporting happens, but when the country is submitting the NDC, they are very clear, right, in terms of what is the conditional and what is unconditional, and therefore, at least that document is referred directly to understand what they have achieved. But yes, the summary of achievements in the format, if it is not clear, then it is bound to be interpreted in a different way. So I may not, unfortunately, have a different answer to that question. And the second part of the aspect, yes, you're right that there is a heavy demand in terms of pushing the developed countries to work towards having a committed way of understanding how they could help the developing countries' conditional NDCs. The EU ETS or the EU itself exploring use of ITMOS, I have not heard. But since you have heard, it's a great news. I'm quite excited to hear that. But in terms of the NC QG, coming up to whatever billions of dollars. The way it could be structured is in terms of how the kind of summary of all these conditional indices from all the developing countries could be stacked up, and then accordingly they could be discussed from the developed countries perspective. And I'm not saying pick and choose, but in terms of how the countries are moving forward, like Norway going a huge way forward in terms of supporting Article 6, and then followed by Sweden. So that is a kind of an indication that certain European countries are moving forward to take the full control and support these countries to see how they can choose the right pathway for meeting the conditional indices. So probably that is the way that the negotiations are also moving forward, because talking about whether 300 is adequate or not is a different story. But even if it is 300, how we are going to achieve that 300 itself is a big challenge. And therefore, one of the ways is to see how the stacking up could happen, and the prioritization of these countries, or the type of conditional indices which these countries have demonstrated in their updated indices and the indices which are yet to come next year. I think that would also help structure in terms of how the climate finance would be kind of allocated for these kind of conditional indices.
Great. Thank you so much. We will just move on to the third round. So this is more focused towards driving India's carbon market and the net zero goals. So Dr. Rambabu, I would request you to pull in your thoughts here. How India is looking at the carbon market post COP29. What is it for net zero India. And how are we looking at integrating renewable energy and nature-based solutions post COP29? Yes, over to you, sir.
Yeah, thank you. I will take only a few minutes, actually, 3 to 4 minutes, constraint of time. The way the domestic carbon markets generally need to be structured is to meet the country's NDCs, and with a long-term view as to how they reach the net zero goals. The domestic markets are supposed to be instruments for doing these two. And if they can establish a linkage with the international markets, so that will sort out a number of challenges, that the kind of problems that the internal carbon-like markets, for example, PAT, etc., we faced, where we could not structure the market well and there was a lot of surplus. That means surplus means that I set for myself a target and I am exceeding my target as a group. That means if I structure my domestic market to meet my NDCs, and if there is an excess supply in that market, that means we are reducing emissions beyond our NDCs. So they can be nicely linked to the international markets, and one can make money. So that one can support or provide a buffer to the domestic markets, not make money. So that should be the ideal way of structuring the domestic markets. I think Government of India and the BEE in India have put together the market on the lines of PAT, and which is to meet the country's NDCs, but also they have a significant focus on going forward how to achieve the net zero. And there is a lot of progress already on the domestic carbon market side. I think a few methodologies are already out, and the mechanisms are very clear. What is awaited is the targets for the various obligated entities, and also what kind of projects non-obligated entities can do and contribute are not yet very clear. And so we expect that to happen in the next few months to come. But I myself feel that there is a less clarity on how to go forward with the domestic carbon markets after the Article 6.2, 6.4 got much more active. So I think as we go forward, things will become more clear. Maybe Priyanka, you could even think about one full session on domestic carbon markets a few months later, and when things become more clear. At this stage, anything that you say, okay, will be only speculation on the domestic carbon market, is what I feel. Thank you. I'll stop at that. Also, considering the time shortage.
Oh, sure. Thank you. Thank you so much, Dr. Ram. So I will quickly, request all three of you probably to give us, your thoughts on what should we perceive for COP30. Maybe it is too early, but, what do you think? What is the pathway from here on? And, what more can we expect at COP30? Yes. So, Mr. Dinesh, I would rather, sorry for that, I would request Mr. Chakravarti to start because I understand that he needs to, move on.
No, that's fine. Thank you, Priyanka. Yeah, so I think, from the COP30, I think the expectations have to be on, more on how our country is aligned to ultimately, sort of get to that 1.5, right? So the big picture of, what COP29 was supposed to achieve in terms of, finance, hopefully COP30 gets to that. There is obviously that number of 300 billion out there, but there needs to be a lot more sort of clarity, one, around that, and secondly, how to get outside of that from 300 to that 1.3 trillion or whatever number is kind of getting discussed out there. So, I would say, that is really the target that, everybody needs to work towards. As we discussed from an Article 6 perspective, I think, there is more work to be done, not at the CMA level, but more, more at the supervisory level, supervisory body level, which is at the UNFCCC level, which hopefully gets done. I don't know if there are any sort of remaining decisions still to be taken. If there are any, perhaps, COP30 could approve that, but hopefully that none is required. It's really more procedural, which can happen at the UNFCCC level. From an Article 6 perspective, would love to see sort of, a more functional market already at that time, and hopefully some announcements on, how much of that sort of trade has happened and how many projects are already there. So that is what my hope is going to be.
Great. Thank you so much. Mr. Dinesh, if you would want to contribute a few lines on the same line.
Yeah,
I mean, what is your
definitely.
expectation from the same?
Sure. Yeah, and I'll echo what Sanchayan said in terms of how we see the operational aspects of the Article 6, because again, Perumal from UNFCCC in the recent webinar on post COP29 said now the PACM is open for business. So that's a great statement, but as we all agree now, there's a lot of moving parts which has to be set in motion. And the good news is that you will get the first 6.4 ERs issued from the CDM in transition. And there is a small catch there that this also includes projects registered under the voluntary carbon standard, which wasn't clear to the public, at least to me, because in total we received only, UNFCCC received only 1,600 projects for transitioning, which is a very small number if you consider the voluntary projects. And very few understood that even the voluntary projects from voluntary standards could have submitted for transition from the voluntary carbon standard, but we all see only CDM transition. So that is one aspect, but almost that window is closed, largely because of the 180 days prior consideration and all that stuff. But that is one aspect. We would see that the interim registry will be up and running, and the full-fledged registry will be up and running before COP30, and therefore more operational aspects. executive board approving at least the methodologies under the CDM. That's going to happen because the additional revised additionality has been rejected. So those are the operational aspects which everybody would be excited to see how 6.4 ERs is going to work. Registry as such is a huge topic, as Sunshine said. So therefore, we wanted to see how the international registry will be kind of operationalized. Some cloud of doubts there, but I think there'll be a lot of progress on that angle. So Article 6 will see a lot of milestones that you and me would like to track for seeing how the way forward is happening from now until COP30. And again, in terms of NCQ, more clarity as we move forward. The G20 has to also chart some ways for that, and therefore you have a lot of interim kind of conferences and major meetings of the parties that would shape up that argument and discussions to take forward. So I think other than this, the NDC submissions would be a big topic in terms of how the countries have progressed or lacked in terms of ambition. That would be exposed from second quarter of next year, once we start getting the analysis of all the submissions, who are the laggards, who are the leaders and all that stuff. So that will be a very interesting topic to see as well. And though Ram Babuji gave a very limited exposure on the net zero, I would think that topic would pick up. I'm part of the ISO working group on net zero standards, and I could see a lot of heated discussions happening in terms of how the organization should move forward to net zero, and how carbon market shouldn't be encouraged for organizations to meet net zero. It's a huge shock to me personally, but all that aspect is going to come up between now and COP30. So COP30 will be not just finance COP, it will be a multiple topics, but it will be an ambition COP, I would say, because you have the next 5 years ahead to be seen. So I would name it already as Ambition COP.
Okay, thank you so much. Yes, Dr. Rambabu, over to you.
Yeah, thanks, Dinesh. Thanks, Priyanka. And I would like to, my wish list would be the increase in demand, the revised NDCs, and every country keeping aside some part of the NDC for the cooperative mechanisms. So, on the sidelines again, I'm again sharing certain hearsay kind of rumors. On the sidelines, I heard that there is a talk about the Brazil COP will bring the whole NDC somewhere nearer to legally binding commitments kind of thing, somewhere in between. So actually a functioning market can operate. And also there was some talk about bringing some sort of a uniform measure as we had in Kyoto, right? Rather than this multiple kind of commitments by a country. So I think there will be some effort at Brazil COP30 to increase the demand and for the Article 6 products, emission reductions, and also to streamline and make it much more functional. Okay, the Paris Climate Agreement and its NDCs. So that's what I think will happen. COP and remaining issues, I think both Sunshine and Dinesh have already covered. Thank you.
Great. Thank you so much, Dr. Ram. So I think this brings us to the conclusion of our discussion rounds. So as we conclude this insightful discussion, it is evident that the outcomes of COP29 have provided both opportunities and challenges for advancing the global climate action. So I mean, with this expert panel, we got to hear a lot of things about, ownership of NDCs, policy-based lending. Carbon market is not the only solution towards net zero, but more has to be done, to reach the final goal. We spoke about where is the demand, how are we going to create the demand. We spoke about technology transfer. We spoke about, embracing the implementation of net zero. We learned about, how Article 6.2, 6.4 both approved, up and running, but definitely a lot of rules, methodologies, regulations, frameworks, really need to be explored. And Mr. Chakravarti mentioned that, the rules of the playing field need to be laid down now. Obviously, we are looking forward that, how, and even in COP30, we look forward as to, seeing actual some operational numbers coming in, after these rules being laid out. We also discussed about how, voluntary market has a larger role to play. I would not say larger, but yes, has a definite significant role to play. Private sector participation is also equally important. We spoke about high integrity carbon credits, which is the need of the hour. Obviously, we are looking forward how, the other markets like IMO and CORSIA are going to, be ahead. Linking of domestic carbon market with international carbon market is something that, we really look forward. Definitely, as Dr. Ram also mentioned, domestic carbon market, we need to wait and see how things will really work out in the next few months. And I'm sure right now it is more speculative, but we will have, certain ground rules laid down very soon. How we are going to, in the domestic carbon market, how we are going to have, targets for the obligated entities, how projects of the non-obligated entities, what will come ahead. How will the domestic carbon market, I would say, function after Article 6.2 and 6.4 being operationalized? And definitely, I mean, going forward, looking forward, I would say, towards COP30, Mr. Dinesh has already laid down the name. So it is Ambition COP30, I think. And definitely we look forward to seeing, few numbers, how things will operationalize. What is the result of actually Article 6 being operationalized? How will things work? How will registries work? I think, it's more towards what action can we really, have in the next, I would say, 11 months or so, until we wait for COP30 to come in. So, I mean, I think, thank you so much. I would really want to thank all the participants and the panelists here for taking out time and being here. So let us leave today with a renewed sense of purpose to translate COP29's decisions into tangible actions, obviously ensuring an inclusive, equitable, and sustainable future for all. I'm sure the road ahead is quite challenging, but with innovation, partnerships, and decisive leadership, we all can accelerate the transition to low carbon economy. So, I mean, thank you so much. And I think together, let us continue to work towards actionable climate solutions. Thank you so much, everyone. Thank you.
Thank you.
Yes, thank you. And sorry for the questions. I think we are really running out of time. We have already clocked 36. We are at 3:36. So the team has taken down all the questions. We have the forms with us, and we will definitely ensure that the questions reach to the appropriate panelist, and we respond back to each and every question over emails. So thank you so much, everyone. Thank you.
Thank you. Bye-bye.
Thank you. Thanks.
Bye-bye.